Well, I thank the gentleman for yielding. Mr. Speaker, this bill today has the word reform in it, the Mortgage Reform Act. But unfortunately, the reform it is proposing would only further hurt the housing market and leave aspiring home buyers with less choice, ultimately keeping them out of a new home. In short, this bill will do more harm than good. Rather than helping revive the economy, this bill will tie the hands of mortgage lenders and will do nothing to jumpstart a flailing housing market. How can we expect more people to purchase more homes when we make it harder for them to get the mortgages that they need? Mr. Speaker, at a recent committee hearing on this bill, I asked that very question to the Director of Consumer Affairs at the Federal Reserve and also to the Commissioner of Banks for the Commonwealth of Massachusetts. Both of these expert testifiers said verbatim, they said unequivocally, this legislation would in fact reduce the number of mortgages that are available to consumers. It's time for Congress to do a much better job of considering any unintended consequences of the legislation that it passes. That's why I offered an amendment to this bill that would require the Comptroller General to study the effect that this legislation will certainly have on the financial institutions that provide mortgages. But the reality is, this legislation here today, it still has too many problems, and the bill will now open up even safe mortgages to litigation by trial lawyers and activist groups. And now hard-working people that want to own a new home are going to have to pay the price in the form of higher mortgage interest rates. So this bill not only gives more opportunities for trial lawyers, it in fact is going to use taxpayer money to subsidize those lawsuits, about $140 million of taxpayer money subsidizing lawsuits. Finally, this bill is called the Mortgage Reform Bill, yet it contains no reform of Freddie Mac, of Fannie Mae, which have left the taxpayers on the hook for billions and billions and billions of dollars because of bad mortgage underwriting practices. We should oppose this legislation. We should get it right. We should do nothing that is going to further hurt the availability of mortgages, especially to first-time home buyers, and that is going to hopefully will move in a direction that's going to help not increase costs, but also make credit more available. So I would urge opposition to the bill.